Hello and welcome back to the Norton Rose Fulbright Oxbow Partners video series on InsurTech. Nico, you're a partner at Norton Rose Fulbright, and so you're looking at InsurTech from a legal and regulatory perspective in particular. So how do you assess the likelihood that InsurTech is going to be genuinely disruptive for the insurance industry?
So the insurance sector has relatively high barriers to entry from both a prudential and conduct supervisory perspective. Regulations like Solvency II mean there is an enormous amount of capital required for a startup to enter the market to be a full stack insurer in Europe, which makes it prohibitively expensive, some would say. And then, even for an insurance intermediary license, you've got a process that you have to go through with the Financial Conduct Authority in the UK. It can take up to 6 months. It's quite an onerous process, and even if you then go on to write business, there's no guarantee you'll be successful. So what we've seen is startups are effectively reliant on piggybacking, if you like, on existing insurers' licenses and balance sheets to be able to gain entry into the market, which means that insurers have almost been able to pick and choose which startups they associate with and back. So there's almost the insurers are almost in charge of who's able to get access to the market.
But I guess it's true that there's always been insurance startups. So a lot of MGAs have launched over the last 10 or more years, for example. So do you think this is a new phenomenon, that it's harder to do an insurance startup in general, or do you think it's something to do with startups in particular?
I don't think it's a new phenomenon. I mean, we've had digital distribution in the insurance sector since the mid-90s, when the web gained traction and you had digital payments. So I don't think it's a new phenomenon. I think there's been a triple whammy of increased regulation, soft market conditions, and excess capital around the market, particularly and low returns.
So do you think it's fundamentally harder to do a startup at the moment, which is the reason that a lot of these insurtechs are struggling? Or do you think that the things that insurtechs are doing create a complication for launching, which was not true when in the old days people like MGAs launched, for example?
I think the MGA model has always been one that is there. I don't think it's any harder necessarily than it was to launch a startup with a standalone authorization. In fact, if anything, it's probably easier because you've got things like the FCA Innovation Hub, you've got incubator firms, you've got established insurers having their own incubators who will assist you get authorization. But I think there's been a realization, if you like, that to go through the authorization process with a fairly low capital base for a startup is not necessarily the most expedient way to progress from a cost perspective until they have established that their business proposition is viable.
How do you see the law and regulation in relation to what insurtechs are doing? So blockchain is an obvious example. It's a new technology. It has enabled things like cryptocurrencies, and I would imagine as a layman that the law has really very little to say about cryptocurrencies. So to what extent do you see this sort of lag between what's happening on the technology side and the legal and regulatory side as being a major either opportunity or barrier for a lot of these companies?
There's always been, if you like, historically a concept of regulatory lag, where the market is innovated based on new technologies and it's raised regulatory issues because the regulator has only realised what's happening in the market after the event, so to speak, which has caused then a reassessment of what's going on. I think at the moment, if you look at digital distribution and the claims processes and product design, that's really covered by existing laws and regulations, and it is innovative and it is new, but it's not really a revolution, and existing law and regulation can deal with it. When you talk about things like blockchain and initial coin offerings and smart contracts, there is a thought process that existing regulation, there are some ambiguities as how it would apply to some of those concepts. In the UK, the FCA actually just launched a discussion paper on blockchain and distributed ledger type technologies because it wanted to have a view on, in the banking sector and the insurance sector, where the regulatory perimeter should stop and start.
So are you overall bullish then that insurtechs are going to be successful, at least from a legal and regulatory perspective, and that it's all going to come down to their commercial product market fits?
Provided there is no customer detriment or market detriment in terms of competition type issues, regulators aren't going to resist the deployment of these technologies. So I am optimistic that if firms deploy them correctly and in consultation with regulators, that they will be successful. I think key to InsurTech success, the key to the success of InsurTech really is collaboration, because you need the input of different specialists and ideas. So you need people with insurance know-how, you need technological specialists, you need the buy-in of regulators, and I think that collaboration is ultimately what will be key to the success of the deployment of these technologies.